Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we just like to remind you that it is the quadruple witching, right? So, what is a witching? That's when the stock index future contracts, the single stock options, the options on stock index futures, and the stock index options all expire on the same day, and it doesn't happen too often, so it can kind of throw markets a little bit off. Okay, there may be some technical reasons why prices may go up or down, but it doesn't necessarily play into the rest of TA that's on the charts. And so, a lot of people can be caught by surprise on this day if they're just going by the macro or by some other factors and haven't accounted for the witching, right? Now, if we do go over to the NAS 100, we can just see how we have basically come back, 2 years. Like we've gone backwards in time for 2 years and lost almost everything, right? So here was July 2020, and here's June 2022. I mean, the market has just taken away everything, right, for the last 2 years. And there's many factors that we can consider for why this is happening. Of course, you have inflation, and that's basically been caused by the correction with a commodity super cycle, right? The commodity super cycle happens every couple decades. In this case, it's being made worse by the energy revolution, right? Which is something that we need. We really do need to get off of fossil fuels, but do we have the sourcing for the metals? Do we have, all of the things lined up for energy independence and for clean energy in such a way that we can just get rid of the fossil fuels all at once? Well, no, we don't, right? We need kind of a dovetail. We need both right now. And sometimes, we see political parties fighting for the dirty energy, and sometimes we see them fighting for the clean energy, and they act like it's two sides that are in opposition, when in reality, we really need both. And we need to be working together right now to solve these issues. And what's making it worse, because the lion's share of inflation is coming from these just surging energy prices, but that's because of an increase in nationalism. And you can see global wars are starting to break out, and there's the potential for global war to break out further as China eyes Taiwan, and other aggressors are looking at the West being a little bit weak right now because of the economic pressures on us. And, all over the world, we see contracting globalism, and we're starting to see more, actions and legislation being taken to boost protectionism at the expense of global trade, and that's also increasing prices. Why would protectionism be increasing? Because an increase of distrust with other countries, and that causes production prices to go higher because you can't outsource to the cheapest producer, which might be your enemy or a rival state, right, or a competitor. As globalization, tightens and protectionism increases, then what we're going to see is just prices going up, and that's right along with energy. But moreover, we also have globalization shrinking just because some countries, like China in particular, some of these major sourcing countries are being cut off either by their own policies, like China's zero tolerance for COVID. They just shut down entire manufacturing districts, and it's insane. It just destroys the supply chain throughout the world. And then there's like a Russia where, sanctions are imposed on them because they're invading, a European country. And, there's going to be consequences from invading Europe. Like, that doesn't go unnoticed, right? Like, you mess with the first world, and it's going to get a little bit screwy, right? It's one thing when countries go to war with, third world countries, but when you step it up a notch and you start invading countries that are part of blocks of first world countries, I mean, there really is the potential for international war, or, of course, well, all war, I guess, is international unless it's civil war. But we're talking about the potential for actually sparking world wars when you're talking about first world countries fighting each other, right? And whether you consider Russia to be first world or second world, I mean, that's up to your perspective, but they definitely have a first world arsenal. So, that's nothing to sneeze at, right? And China as well. So, China is the largest economy in the world now, and we can't really dismiss these players when it comes to these security threats. But moreover, the relative changes in power globally means that monetary policy is also very shaky because we have the world's reserve currency in the US dollar, but that's starting to be challenged from every corner. And you can see that even oil is starting to shake off the dollar a bit, bit by bit. And there are going to be real repercussions to this, but we'll see. Anyway, these commodity super cycles tend to have massive, massive corrections that are unlike usual corrections. They also have setbacks that can last decades. What else is attributing to these undesirable setups here is also, of course, the real negative yields are just basically upside down. There's the ongoing threat of higher rates, right? The Fed can just continue to increase rates, and what that's going to do is just suppress the economies and the especially the risk-on assets as the Fed intentionally tries to cool off the economy. And this isn't good. If we're in a commodity super cycle that's going to have a massive correction, then tightening has problems because what you may need eventually is investment into new processes, right? New ways of doing business that can get around the problems that were built up in the construction of the super cycle, right? In the path upwards, we were doing something wrong. We were investing the wrong ways, especially since COVID. You know, uh, all the industries in the world pointed their money in a certain direction. And then when COVID ended, they need to make big business changes. They need to develop new departments. They need to fill different staff. They need to just change their operations and invest in a different direction. But the problem is because we have the hyperinflation associated with this super cycle, the Fed has to continuously increase rates in order to attempt to keep up with the inflation, and that creates a gap between the savings, between savings and the bond yields as compared to real inflation, right? And so when savings and bond yields actually have, a negative yield, then we consider that a real negative yield, even if the bonds are showing positive yields. People are losing money because of inflation, which again goes back to the first point that we were talking about, the commodity super cycle, where just energy cost keeps stacking up. If you want to buy an electric vehicle, it's the sticker price is huge. It's incredible compared to just buying a gas, car. And so, have we extended too far, right? Do we need to, you know, really take a hard look at what's going on here? I believe that we are. It's just that both sides are entrenched, and we really need a lot more compromise to get through these issues. And as for the nationalism and the protectionism and the threat of war, that may be something that's simply unavoidable. And of course, Federal Reserves cannot control these type of politics. They cannot control energy policy. And so what can they do? They can change rates. That's about it, right? So that ongoing threat of higher rates is just going to, exacerbate this, super cycle decline, and it's going to limit the options for businesses to be able to invest in directions that can correct for the temporary direction and the misdirection during the COVID era. And what that results in, of course, is a falling knife pattern on the charts, where you can see we're, putting something kind of a pattern in that's very similar to 2008 and also 2000, where this falling knife just appears on the chart. And nobody wants to be the first to buy a falling knife. I mean, they're most likely going to be, left holding the bag. So when price structure breaks, people are waiting for the bottom, and that just causes the bottom to come at you faster and faster as the decline just sharpens on its way down. And of course, there's contributing factors to this, which is the uncertainty related to a possible recession, or that we may even be in a recession already, but that it could become a global recession. And the question of whether or not, even though we've had all of this correction so far, right, which was a massive, basically 25% correction in the S&P, which is huge for stocks. Okay, that's a huge decline for stocks. But the question still remains: are these, companies still overpriced? Right? Are they still overpriced? And is it largely the fault of, money printing, right? Money printing and basically corporations giving out loans just recklessly, right? Just giving out loans to anybody who wants loans, just massive student debt, just credit card swiping, just continuously swiping credit cards on everything. And, of course, stimulus and all of that. But the banks, for quite a while, were just giving out loans to whoever wanted one. And the government also was giving out loans and stimulus to anybody who was in need. And this has just racked up, so much overheating of the market, so much dumb money just investing everywhere and into everything, and even smart money investing in directions that they really had no business investing in. And suddenly you see them making huge U-turns. For example, Coinbase suddenly having to lay off all of the people it just hired because, to be honest, it was just, high on that cocaine of the bull market. And all of these companies were just high on the free money and the low interest rates, right? Because they could get a loan whenever they wanted. They could just basically get free money. And as long as they were profitable, right, in their business, then they had no problem paying the 1% interest rate or whatever. It's nothing. Like they could just get unlimited, infinite money from banks, and they would just be paying the very teeny tiny interest rate on it, which is quite different than most retail consumers who may be paying like a 10% or 20% on their credit cards or whatnot. But businesses could just get basically free money. And that allowed them to extend credit to their customers at whatever rate they felt was, you know, appropriate. And so the money supply just increased and increased and increased because whenever you issue a loan, you're increasing the money supply, and that makes money worth less. And so money becomes worthless, right? So to correct that, the Fed has to increase interest rates in order to bring that all down, force people to repay their loans. The bills have come due. Like, you can't just extend yourself beyond your means forever. The chart just can't go in a straight line up, right? You can't just go straight up forever. You have to pay the bills. And when it's drug fueled, by money printing, then the correction can be quite harsh. And what we've seen here, like in the cycle around 1999 to basically until 2010, is it can take 10 years, right? We didn't get to recover the prices until 2013. So you're talking about the year 2000 to 2013 until you got to see your prices move beyond this double top. And that meant 13 years before you saw higher prices. Now, crypto has never seen something like this before, but it may be facing it. What if it took 13 years to get back to our double top, right? Again, like for the S&P, it took 13 years, right? Took 13 years to recover from this massive double top. And we don't know how far we're going to correct in this decline. But if we are correcting for a super cycle, just like back in 2000, then it could be quite deep. It could be way deeper than you could imagine. Potentially, you could break that $10,000 low on Bitcoin and even come back to these prices, like 3,000. I mean, I don't dare say it because a lot of people just won't believe it. So I haven't mentioned this before, but I mean, it is possible to go back to these type of $4,000, $3,000 prices, and then it could take years and years to recover to 60,000 again. Just how markets work, okay? Don't blame the messenger here. But let's go ahead and take a look at the charts. We can see basically that we are at 20,600 still. So just like I was mentioning in the last episode, I just saw us as going sideways, slightly curling up, and it appears that that's what we're still doing. Doesn't seem to be any big surprise here. Just what I expected based upon the metrics of the indicators. And if you will recall last episode, I drew this. I suggested maybe we could get a flash wick, but we'd probably hold the support. And one of the wild cards here is going to be the quadruple witching that we have today. So at the end of the day, perhaps we do break down and wick down and then pop back up, or maybe even we continue to drop. Right? Maybe the stocks just want to keep going down. But we could also pop up. We could pop up and we could basically have some type of weekend fake out, and then on Monday or possibly Tuesday just drop to hell, right? This is not the best day to be trading on for those longer time frames, those mid time frames. Maybe you can be scalping this kind of rounded wedge that we have being put in here. But just to be careful, it is one of those tricky days. However, we are going sideways, exactly like I mentioned in the last episode, and that's to be expected. I know a couple people, actually, probably the whole of crypto Twitter was thinking that we were just going to dump down to super low levels yesterday. But that's not what the indicators were saying. We're a little bit tired on the Bitcoin chart of dumping. And while we are oriented in a way that we could dump potentially pretty hard, we could, we still have some fuel left to dump, right? We are kind of exhausted. I mean, the move is basically played out, and you would expect the MACD to start softening. You can already see a slight soften in it. And while we could, get one of these wicks, like I was mentioning, probably we're going to continue to soften, and then maybe we'll get rejected and continue to dump. But we are seriously oversold, and so the tendency will be to come up. And as you can see on the RSI here, we do have the potential to cross the EMA. And if we do cross bullishly on the EMA on the daily, then there's a good chance that we can get a little bit of run. Perhaps a little bit of a dip before that run, but most likely we have a little bit of a run, a little bit of a bounce in front of us, which could be just sideways in this dramatic downtrend. It could just be, putting in like one of these platforms before we continue down. Or it could be just a little pop up, maybe to 24,000 at most, 23,000. It would be pretty ambitious to get above that. If we did get above that, we could, if we can get above like a 25,000, 26,000, then most likely we could turn some of these indicators around, and the potential to continue upward would at least be there. But that's pretty far away, and the circumstance on the charts, with stocks isn't that great. We're really going to need to see a push up by many of these ones. Let's go to a 6 hour and just see how things are shaping up out here. Not really sure that, I've got my support perfectly aligned here. It's quite a complex area, but looks like we're just on support and attempting to hold it the best that we can. And really, we need to just pop up here. But we're so borderline on the NAS 100. Not even sure what to say about that. I may have just drawn it a little bit differently here. Yep, that's what I thought. Maybe use this as support. I mean, it's a zone, right? It's basically a zone. But we can consider this range because we do have the gap up here, which still, could potentially be filled. And anyway, we need to revisit 11,775 approximately in order to potentially take it out and avoid falling to hell, right? Every chart is looking pretty much the same, just kind of struggling to get to the next support. We're filling some small 6 hour gaps on the Nasdaq. Weren't able to reach that one. That was a very weak move. S&P mini futures looking again just like in the middle. It just looks very weak. We were looking at the fractals, the possible fractals from 2008 and the year 2000 on the S&P. I've mentioned these a few times. I noticed that crypto Twitter has picked it up. Definitely, I came up with this concept independently, but it is nice to see that other people are observing a similar thing where one of these fractals may be playing out. And again, it's just kind of a psychology of the market. The reason why these fractals can work or have some validity is only because, the same institutions, the same bots, the same big players tend to stick with their stocks. And so, it's just they tend to trade in the same way under similar circumstances or under similar stresses. And so it's not really like we're saying it's not just like mathematically written that it must do this. It's just that on the whole, human behavior is it's pretty predictable, right? I mean, to some degree. How do we arrange ourselves in cities? Well, you can go to almost every major city in the world, and every single one of them operates almost exactly the same, right? So if people weren't very predictable, then whenever you visited a big city, it would be wildly different. But people arrange themselves in very predictable patterns, and people aren't that different. So collectively, it's very easy for us to develop patterns that might end up playing out. And whether it's one of these more kind of, merciful relief rally filled corrections, or whether it's just a deathly, fall to hell, we are putting in the tops of the fractal of both of them, and we're about to find out pretty soon just where we can go and just how low we can go. Now, a lot of people are trying to say that this is the bottom of the market, that we've already made it to the bottom, but I would challenge them to prove any factor that shows that we're at the bottom of the market. I mean, they can't just use information from the last 10 years. So, especially if they're in crypto, they don't really know what they're talking about because they haven't seen any other markets, uh, outside of the super cycle if they've just been focusing on crypto. So, we've already basically come to the previous all-time high, and if we look at CME, the Bitcoin on CME, we basically have come lower than the all-time high on CME. You see, this price is up here, and this price is here. So technically, we're lower, or we came lower than the all-time high. Now we did pop up, like we're actually perfectly aligned with that. Look at how price is just sitting like right at the all-time high on CME. There's this thin little red line that runs all the way across, and that's where we are. You can see the price over here, like we're literally at the previous all-time high price. And the market is just struggling to hold on to that. And that just happens to, correspond to this little, consolidation area here. And also this wick right here corresponds to that one. So we have this little zone that we could potentially push through next, right? Could kind of work our way through, and it's kind of supporting us up here. But when that goes, you can see that we can actually fall down to 14,000, all right? Or we could fall down to like 11 or 10,000, right? 10 to 11,000. And then if stocks just continue to push down, and if it really is a super cycle correction, then we could be talking about really coming down to these prices like 6,000 to 5,000. It's really possible. People don't want to hear that, but it is really possible. And of course, this would throw a lot of people off if that did happen. who might be buying at 20K because, holding up this price basically because they think we can't violate the previous all-time high. That's been kind of a meme that's been out there, that we can't violate the previous all-time high. Guys, I hate to break the news to you, but there's no rule in trading that you can't break the previous all-time high. It's only a coincidence that we haven't. It's not a principle that you can't. That's completely meaningless. It would be like saying, we hit, 65,000, so we can never go below 65,000 again. No, we got to 69,000, and then we came down lower, right? We broke down. So we violated this top, and then we violated this top, and we can easily violate this top next. And then we could even violate this one. It all depends on the macro economy. And you guys who are just looking at Bitcoin charts over and over again, which is fine, to the extent that we're in a regular cycle. But if we're in a super cycle correction, and by the way, I'm talking about a real super cycle. I'm not talking about the stupid, fake super cycle that some of these crypto Twitter guys were talking about last year, where they were talking about the extended cycle and all that stuff, and pushing to $1 million, and they were calling it the super cycle, like Ran of Crypto Banter, or even Ben Cohen. I'm not sure how he addressed it, but I just know that term was misused. I'm talking about an actual, economic super cycle based on commodities, okay? And some people will call this the crash of everything, like the everything crash, because it's not just crypto which is crashing, but everything is crashing, right? And so we're going to see how this plays out. But headed back over to Bitcoin, you can just see that we are, hanging on by a thread, by that kind of wishful thinking that we cannot violate this previous high. And let's just take a look at where we are here with my alpha channels. So the alpha origin channels here are showing that, we've basically approached the zone. A lot of you guys didn't believe, when I was talking about it up here, right? A lot of you guys didn't believe that we could fall this low and that we would ever reach this red line. They just thought it was just an absurd concept that I was putting out there. Of course, we had to go up and touch the pink line, right? I mean, it could have been possible as long as we were below the yellow line. But, once we broke this white line, it was almost guaranteed we were coming down to the red one. The way I've marked this out, it's pretty logical. It shows that we were going to come to this kind of like between this blue line and this red line. Pretty likely, right? And next, we may break down and dip into this green area, and that's where you just want to buy all that you can buy. Of course, this does, you know, this does have some coincidental pattern, coincidental or correlation, right, to the 2018 correction on Bitcoin, right, where I showed you this fractal and I showed you how it could play out, and sure enough, it did. It absolutely did. And if we start putting in an accumulation pattern, then you'll know we're probably going to recover in a similar way, especially if stocks are bouncing. But if we don't put in that accumulation pattern and we just, have kind of violent moves or just a choppiness and it kind of leans to the downside, then probably we're still falling like in COVID, right? Or during the end of this one. And so maybe we'll accumulate at a lower level, such as those numbers that I mentioned. You can see how this this pattern up here would actually bring us back above that 28,000 level, which does appear to be the bottom of the top of our chart. And that's exactly what it did in 2018, but for that $6,000 level approximately. So that's very interesting. Um, in 2018, it actually did bump its head on this line. So if I just lowered this just a bit, then maybe this pattern is going to extend down to 15,000. Again, like you don't really trade on these fractals. You just have to give it, you just have to recognize it as a kind of psychology that could possibly show something similar again in the future. And, you know, the real thing that we had to be looking out for was the different crossings of the EMAs. And sure enough, on the 3-day, I was showing you those crossings that would drive us down. And they absolutely played out. Right? There's the 50 and the 200 and the 20 and the 300 here. And those crosses just continued to drive us down. Whether or not that move is fully complete, if this fractal does end up being extended to the downside, such that this node over here should touch this line, just like it did in 2018, then again, like perhaps we see these lower areas, or worse, or worse. Perhaps something like this. These lines are all messed up. We do have the CME gaps, these new ones that we formed. Of course, we filled the old one from a year and a half ago or whatever, but we've created two around it. So we got 2 for 1 over there. It's unlikely that we'll be filling them anytime soon. Again, being in this area, just taking a look at these different levels that I've got kind of marked off here. Anything in the green is a good value right here, and anything in the blue down here is just hope you can buy it, But this is the nice DCA area. Assuming that the Fed gives us the indications that we're reaching peak inflation. If we don't have the indication that we're reaching peak inflation, then even DCAing at 20,000 could seem absurd for a long time. This asset could decrease by half, right? It could go to $10,000. And so in the context of a super cycle correction, which there's no doubt we're not blasting off to 100,000. We're in a correction. We're fully in a correction. And in the case of a super cycle correction, we could see these lower levels. I'm not saying that we will. I'm not trying to curse crypto or anything. I'm just saying that if the rest of the world's, assets, if the commodity super cycle is correcting, not just crypto, but if we're having the everything crash, then absolutely we could see these levels down here. Okay, so just to be open-minded to that as you're budgeting these things. It may not even make sense really to target 20,000. Let's see. We have these fib channels, which more or less align. And you can see we're just traveling down this fib channel. If we break down, we're going to break down, to this $12,000 area, perhaps, bounce around before we pop up. Could be $10,000, right? Then get a bounce. Just if we follow this kind of pattern, or just chop around this line, perhaps. Maybe 18,000 or 16,000, perhaps. We have these fib channels. On the linear chart. You can see we're kind of hanging on to this channel. And if we break down, it would suggest, if we just kind of wick down, then maybe 18,000. But if we really fall all the way down, then maybe 16,500 before we, catch the next line the way that we've been catching it whenever we fall. Caught it here. Bumped our heads into it up here. So, yeah, I mean, we could wick down lower, but perhaps we get caught up on this next fib channel line. And that would be confluent with the 768, which is a good retracement number, and also the 886 would be down here, approximately 11,000. And if we just wiped out this whole era, then, I mean, you could consider 4,000 or wicking, below the 886, to that $7,000 area, perhaps. Just a thought. Again, in a super cycle correction, a commodities super cycle correction, you can't really dismiss these concepts. You have to treat them as possibly realistic if the stock market doesn't get a good bounce. And so these zones, we've taken a look at these zones many times. And while technically we're at a zone that I was really targeting at first, as time has gone by, we've just learned a lot of information about what the market is going through. And if it was just crypto, I would say, hey, it's time to buy. If it was just crypto, I would say, hey, it's time to just stack up. It's like we're at good prices. Maybe we could come a little bit lower, but when we get into this box, you should just stack up. Or when we tapped it, I mean, we perfectly tapped it. So I don't know. You're going to have to make some hard decisions for yourself. Do you believe that we're coming down more? To that 786? In which case, that's a good box. Or do you think we're going to go all the way to the 886? In which case, really 11,000, 12,000 is kind of a target. And perhaps wicking further down to 10,000. Personally, I'm considering a heavy DCA. in this area. Perhaps for a trade, right? For a trade. And then if we go lower, another heavy DCA just for a trade. And then if we do get to this 11,000, perhaps even a hodl position, which I don't really recommend making a hodl position unless you have an accumulation pattern on the chart. So probably all of this is just a trade. But you're really getting it really low in these areas, so think for yourself. We're going to have plenty of time to talk about it. If we do continue to the downside in stocks and in crypto, then it could take months, right? It could take months to play out. We have to get more CPI data. We have to get more PCE data. These are all inflation numbers. And we have to understand what the Fed really wants to do. And then we have to see like how things with the war in Ukraine work out, or if China's going to invade Taiwan, or just all sorts of factors that are up in the air. What's Europe going to be doing about, the different type of financial crises that it has in its region? It's not all about the US, right? And so optimistically, do we have the possibility for this bullish correction? I think that that possibility is over. While we did get the drop down, which is quite interesting, we did get the drop down that I suggested for a bullish model, and if we did pop up, hey, that's right in line with the actual figures that we actually need to meet. So if you look at all of the indications, all of the indicators, and do the math on it, then we need to get above $26,000 basically and hold there. Like we have to hold between $26,000 to $25,000, and then we could possibly get a run. If we could take out that 30,000 and just keep going, right, like this. And so this pattern that I had drawn out, which was based upon a pattern from months ago that I drew out based on a calculation, technically it's still possible. Just and since this consolidation area could take months to the end of the year, I don't dismiss it yet. If the next inflation data is really good, then perhaps the bottom's in. But we have at least a couple more weeks before we get any indication of that. And we have another full month until we understand what the Fed is going to do. And so there's plenty of time to be bearish, within 2 weeks to a month. Because markets may just want to push down. They may want to just push down. There's nothing really good in the news. What would be pulling them up, right? Just being oversold on the indicators. They're not fully oversold yet. A lot of these aren't really in a very bullish position in the stock markets. So I think this is becoming less and less and less possible. But I can't throw it away yet. We have to still consider it. For these arrows, that ended up being kind of like a bullish pump. Look, I mean, we had a breakdown on it back here in 2018, and we are having a breakdown. If we could work our way back into this wedge and pop up, I mean, we have precedent for that. Let's see what my bullish model looks on it. Yeah, like my bullish model, looks very similar to that. So it, again, like this is getting pretty far from this wedge. It looks like it's almost too late. It looks like it negatively tested it. Like if we zoom in, you see this wick, like attempted, but failed, right? Like this looks like a continuation to the downside. Whereas this looked like it was just popping back up, right? Like a quick detour, right? Just fake everyone out. But this one looks like it's actually being lost. And so the hope for this kind of a bullish wedge is just decreasing also. One funny one, I mean, it's kind of funny to me anyway, is this broken eggs or the crossed eggs, right? This one has just continued to work out, and I don't know what the deal is, but it's something about the energy of the system where like we go from one side of the egg to the other, like the one lower third to the upper third, lower third to the upper third to the lower third, right? Lower third to the upper third to the lower third, upper third to the lower third, and it doesn't fail. Like if you can establish, kind of a zone and a trajectory for the first movement, you almost know where it's going to end up. Like if I had understood this pattern, right, this kind of fractal, and again, this is just my original thinking. It's just kind of absurdities that I look at. But if I had understood this back here, I could have just said, oh, hey, we popped up. Probably we're going to end up in this area. Like, oh, hey, like we're starting in the lower third of the next one. Probably we're going to pop up in this area. Like, oh, we're dropping and kind of trajectory down. Probably we're going to end up in the lower third. Imagine playing that, right? Oh, like we started to pop up. Probably we're going to end up in the top third. Oh, we started to curve down. Probably we're going to end up in the lower third. Oh, look, we slid down. Probably we're going to end up in the lower third. So I'll be paying attention to what kind of egg we put in next, because if it's an egg like this, then perhaps we could consider something like that. And maybe I'll just give it a little benefit of the doubt. Maybe we're going to pop up a little bit or something. And then we could end up around 15,000, 15, 14,000. And let's say that it was kind of like a bullish egg. I mean, it almost looks like it doesn't fit, but let's say that we just kind of like, kind of curled around or something. It's sort of like here, right? Sort of something like this. Maybe a little bit of overlap. And then we put in something like this. Right? I mean, this is a comical idea, but just to entertain the concept. Then maybe 24,000, right? 25,000. Maybe that's what could carry us home, right? Personally, I'm leaning towards the egg breaking to the downside, but we'll see. We'll see. To be continued, right? That's just a funny concept. And then we also have the banana pattern, which just continues to play out. Just ridiculously continues to play out. And hey, if this banana pattern really is being put in, just check out that egg again. Then maybe it is the bullish egg. Look at that. Look at that. Maybe the bullish egg leads us to the bullish end of this banana, right? I don't know. Just being funny. I wouldn't trade on any of those things. Just being a comedian. Of course, we also have the Fib Circle, which we are just continuing to round down. Not sure what the end of that would be, but here it was when we deviated significantly from the circle to on the inside of it, and we got to a certain degree away, and then we just like rocketed up. And in this one, we got kind of a certain degree away, and then we just curled up. So potentially we do a drop, maybe like 15, 10,000. and then just rock it up, something like this, right? Could be possible. Seen it before. Again, those death crosses that I was showing you on the 3-day, these were the measured moves for them. And the bottom of the last one suggested a 50% drop, which would bring us around that $18,500 area. So if we do continue down, that would just be very consistent with the previous crossing, that previous negative cross that we had in 2018. We don't have to crash all the way down there, but most likely, we will. And if we break down there, probably we're going to continue down anyway. But we'll see. I think that's it for it today. That was a good hour session, but we covered a lot of concepts, and hope that gave you some insights into what to expect, or at least how to think about these things in different ways. And of course, take everything with a grain of salt. But ultimately, we're just doing what I said last episode, which is kind of putting in an area of consolidation, rounding out, just like what I suggested last episode. And the possibility to pop up still remains there because we do have a quadruple witching today on stocks. And yeah, I mean, look at this, kind of a fake out down, popping back up. There is the possibility for that pop up. Oh, yeah, look at this one. This one's going for it. I mean, it looks like a lower high. That's all. But you never know. Like these things can sometimes just go for it. Yeah. I don't know. It's all pretty borderline. So hmm. Yeah, I don't know how rigid this floor is. It may want to break down further. Volatility is coming down. Pretty strongly too, but catching some resistance. The dollar curving a bit. Tether kind of meeting some resistance up here. Looks still bullish. Ethereum is trying, but not sure if it's going to make it. All right, guys, I'm going to wrap up. So that was your alpha for the day. Stay safe and happy trading.